Welcome to the Loner Ranger Radio Show. My name is Bruce Woodburn, and yes, I'm the Loner Ranger. What a beautiful Sunday. You know, you're probably out today, just like me, working around the yard, tinkering around the house, fixing things, cleaning the house. That's what we do. That's what we do. But you know what? I have to tell you that this has been a very, very special week for me. And I'm going to share a couple things with you that happened to me personally, and I'd love to hear from some of my friends out there listening to my radio show. You know, this is a show where we talk about how to save money in real estate, how to buy real estate, and really maximize your retirement so that you can retire with a bunch of money in the bank, how to save money, the time to refinance, the time not to refinance, reasons to refinance, reasons not to refinance. Is this a buying opportunity, or what are interest rates doing right now? These are all the topics that we talk about on the Loner Ranger Radio Show. So whether you own a home or don't own a home, is this an important show for you to listen to? Yes. Why? Because I keep you current on economic news that's not fake. It's the real deal. It's the real deal here. So we got a couple things I want to talk about in this first segment, and then we're going to talk a little bit about in the second segment about how to help teachers, law enforcement, first responders with special mortgage programs available for you that are not available through your city, county, or state, but they are special programs that we have developed to assist you with saving money when buying or refinancing a home. If you are in law enforcement, first responder, that means EMS or firefighter. If you are in law enforcement, if you are a teacher, if you work for a school in any capacity, if you are a nurse or healthcare worker, you qualify under our home program, Home Ownership Made Easy. We're going to talk a little bit about that in the next segment. Let's bring you up to speed on what's going on in the market right now. First of all, what have interest rates been doing? Well, I can tell you this much. Since last week, they've been going up, and they've been going up pretty steadily. We have some really strong economic news. The stock market's starting to rally again. You're seeing some ups and downs, but keep in mind, and this is, I think sometimes you may think some of the things that I'm talking about on this show tend to be esoteric, but they're not really esoteric. They're things that you should know. When your money is moving in a positive or negative direction, in one direction or another, don't you think it's important that you've got an idea as to how to balance your funds? Well, this is what I do. This is why I'm on the air right now, so I can help you save money and make more money with your money. So let's talk about what's going on. What happened? The bond market started to deteriorate. We're falling below these moving averages. And when you fall below a moving average, it takes a significant movement to pop above what's called that ceiling of resistance. And we've just popped below those ceilings of resistance, which is causing interest rates to go up. So as the bonds deteriorate, the stocks typically will bolster, meaning that equities are going up. That means if you've got money in the stock market in your 401k, you're probably pretty happy with the way things are going right now. If you are have not locked in on an interest rate, then your interest rate is likely going to be higher today than it was a week and a half ago. That's just the way it goes. That is not things that lenders can control. I get calls every day from folks who go, you know what, I went to my bank or I went to this lender and they didn't lock me in. Well, I want you to know that you are in charge of when you lock your rate in. Your lender is not in charge of that. Now, the longer you lock your rate in, the higher your rate's going to be. In other words, when you see typical rate quotes, they're on 30-day locks. That means you have to close and fund within that 30 days. Well, if you're uncertain or you're building a home and your home's not going to be ready for 6 months, it's probably not worth you doing what's called a long-term lock with a float down option. I have those options. Some lenders have those options, and they sound really good when you say them fast, but they're not as good as you think they are. It's really insurance, and sometimes it pays and sometimes it doesn't pay. I will tell you, if you have any questions for me or you'd like to call me here at the station, 407-706-3313. That's 407-706-3313. Oh my smokes, I can't even say my own number. 407-706-3313. Or visit my website at webringyouhome.com. webringyouhome.com. So as the market shifts and the economy looks like it likes what's going on in the economy, then money flows, institutional money. That doesn't mean your stock that you bought in Google. That's institutional money. That's the big hedge funds, financial investors, banks, insurance companies are shifting their money. They shift their money from equities, stocks, into bonds. Why would you go into bonds? Because bonds don't pay that much money. Why would you go into bonds? Because bonds are what we consider to be a safe haven. So when the stock market's doing well, you want your 401k investor, financial planner, the wealth management people to move into equities or into stocks so you make more money. But when things are rocky, you want them to pull out of there and shift into bonds where it's safe. You don't make a lot of money, but you don't lose a lot of money. And right now we're seeing things shifting back into equities. Bonds have taken a beating. And what does that have to do with mortgages? Well, mortgages are directly tied to the Treasury bill, which are bonds. So that's why we're seeing an increase in interest rates. And we've lost a lot of ground. We've lost over 100 basis points here just in the last week and a half. Well, sometimes, like I say, you may think that sounds esoteric. Well, what does that mean to me? Well, for every 100 basis points that we lose in the bond market or gain in the bond market, it equates to 1 point that you would pay. Well, what's 1 point that you would pay? 1% of the amount that you're borrowing. Okay, let's just put this in perspective. You're getting a $300,000 loan and mortgages shifted like they did, and let's just say you lost 100 basis points. Whatever you were buying as a rate for 0 points, you now are paying 1 point for that. So now some people say, well, I don't want to pay a point. You don't have to pay a point. Then your interest rate goes up. So the lender adjusts what's called the discount. So you can always get away with no points, but you will pay a higher rate. Or if interest rates go the other direction and they start improving because money is shifting from equities because stocks aren't doing as well back into bonds, and then mortgage rates start to improve, then it goes the other direction. So then it's great for you. So whatever might have been costing you 1 point now might cost you no points or a quarter point or a half a point. So that's a little bit about what's going on in the market right now. So am I afraid of what's happening in the market right now? No, I'm not. Did I predict this, and did I tell all my friends that are listening to me out there that you were going to see interest rates rising? I've been telling you that. I've been telling you that for 4 months. And I've been telling you to lock your rate in because interest rates are going to start going up. Well, what are they doing right now? They're going up. So is it too late? It's not too late. Are they still super attractive? They're still amazingly attractive, considering what they have been in historical past. Are they as good as they were last week? No. Are they as good as they were in January? No, they're not. But are they great? They're great. Okay? So that's the difference. You want to buy a steak? You want to go to Ruth Chris and buy a steak? It was $50. Okay, that was a good deal. Now it's $57. Okay? That's the kind of deal we're looking at here. So is it higher? Yes. Is it still an opportunity? Yes, it's still a great opportunity. 407-706-3313. This is the show where you listen to and you get the real facts. Because when you listen to your commercials about Loan Depot and the Rocket and all these guys that are fancy talkers, they make everything sound like you're walking on rainbows and riding unicorns. And listen, I think it's still a great opportunity to get in the market, but you're going to get the real story here. So do you want somebody that's going to blow smoke up your butt, or do you want somebody that's going to be honest with you and walk you through the process? If you want somebody that's going to be truthful and honest with you and really, truly a financial trusted advisor when it comes to your financing, then choose me, the Lone Arranger. I've been doing it 32 years. Check me out on the Google. Check me out on the Zillow reviews. Check me out on that. You're going to see that I'm the real deal. Okay. You get what you get when you come to me. And listen, some of you you may come to me and you might not hear what you were hoping to hear, but you're going to hear the truth. Okay. And some of you need me to tell you the truth. If some of you listening to my show right now need to send your adult children to me so they really get the truth, because I'll be a game changer for you. I promise you I'll be a game changer for you. And you won't get a sales pitch. I don't have anything to sell you. I'm in the business of doing mortgages, but remember, I'm giving money away. I'm not taking money from you. Okay, I'm going to loan you money at a great rate over a long period of time, and you're going to pay me back a little bit at a time. But during that time frame, we're going to make this happen over and over and over again, which reminds me about my wealth building class that will be limited, but I'm hoping this is my last Zoom wealth building class. This is called Retire as a Millionaire. You heard me. Retire as a Millionaire. It's going to be October the 20th at 6 p.m. You must register in advance at WeBringYouHome.com. I've only got 100 seats available, and they will fill up fast. That's WeBringYouHome.com. Now, what do we talk about in a wealth building class, and why the heck is a loan arranger qualified to teach a wealth building class? My God, I heard he only has a 10th grade education. Well, that's not true. That is not true, because I didn't finish the 10th grade, so I don't have a 10th grade education. Okay, I do happen to have a PhD, though. I have a public high school diploma. Well, that's not entirely true either. I don't have a public high school diploma. I have a public high school diploma equivalency. Okay, yes, that's right. Dropped out of school in the 10th grade, lost both my parents within 8 months of each other. This is not a sympathy card here that I'm playing here. I'm just telling you, I dropped out of school as a young person, probably went in the wrong direction on a few occasions. Okay, not one, not two, not three, probably more than that. However, I got my high school equivalency. That's what I got. Okay, why am I qualified to teach a wealth building class? Because it was early in my career. Okay, but too late. I'm like, I want to help you guys in your 20s. That's when I can really help you. 30s, you're still good. 40s, we can make it happen. 50s, okay, we're pushing it. All right. But I'm here to help all of you. But here's what happened. People that cared enough about me that I listened to, because there was a period in my time I didn't listen. Okay. I had it all figured out. You know the type of person. I had it all figured out. I thought I was smarter than everybody else. The problem is I wasn't smarter than anybody. So what happens though is you start to gather and position yourself around folks that will help guide you in the right direction. And I'm volunteering for that job for you. I'm volunteering for that job for your adult children that need to get their act together, and let's get into buying real estate. You know, there's no such thing as a rich renter. There is no such, you can't find one for me. They don't exist. I've never seen one. I've never met one. I've never seen one. 407-706-3313 or WeBringYouHome.com. That's WeBringYouHome.com. If you're out there renting right now, listen, I don't want you to feel bad about yourself. I want you to make a change, because I'm tired of watching you sitting on the sidelines of life, watching the rest of us get wealthy in real estate. I mean, good Lord, if you bought a house a year ago, you probably made $50,000 on it in 1 year. 50 grand in 1 year. That was it. Now, what I teach is what I do. It's not what I'm not some grandiose Svengali that made millions in the 70s and trying to teach you how I did it in the 70s. I grind it out every day, okay? I'm just a grinder. I'm not the smartest guy you'll ever meet, but I was able to amass a pretty substantial amount of money, and I did it a very simple way. A lot of people think you need to have a lot of money to amass wealth in real estate. You don't. I will show you how I will guarantee you'll have $2.5 million in free and clear property in 20 to 21 years. And other people are going to make you rich for it. You're not going to have to do it. There's a very limited amount of money that you're going to have to save to make this happen, but you are going to have to be committed to the process. So I will teach my process on October the 20th, 6 p.m., WeBringYouHome.com. That's WeBringYouHome.com. I'll be back in 5 minutes. We're going to talk a little bit more about this, because you can see I'm passionate about it, but we're going to also talk about my home program for teachers, law enforcement, and first responders. Be back in 5 minutes.